Thank you, Madam Chair. And so to our newbies, welcome. To our frequent flyers, Mr. Scharf, Moynihan, Diamond, and Ms. Frazier, welcome back. One more punch on the punch card, and I think you get a free cup of coffee. Interestingly enough, you've actually been here more than Gary Gensler has. I wish we would pay as much attention to the actual regulators, the folks, by the way, who we have constitutional duty to have oversight of, than those that the regulators are supposed to regulate. Mr. Diamond and Ms. Frazier, I want to give you a very quick, brief moment. Do you comply with U.S. and international sanctions? I think that was what the implication was earlier when you were interrupted. Very quickly.
Absolutely.
Okay. Ms. Frazier?
Absolutely.
Okay. So those are U.S. and international sanctions. One it. All right. Last time, those of you that are return members and return players, you'll remember I asked everybody what their one issue was that they thought was going to be the biggest barrier. Mr. Moynihan, you said the economy. Ms. Frazier, you touched on cybersecurity. Mr. Scharf, you hit cyber as well. Mr. Diamond, you talked about public policy. And I'd like to give you a moment to clarify that. This is multifaceted, the various elements to that. But if you could just lend a little color to that, I'd appreciate it.
It'd be a pleasure. So public policy, I think America, if you look at the last 20 years, we've grown 2%. It should have been 3%. We should aspire to do more. That lack of growth has hurt, I think, household income by $15,000 or $20,000 by the end of the 20 years. It would have lifted up all of our citizens. It would have paid for a lot of programs we want. We don't strive for growth. If you look like why it wasn't 2%, which is why I was exploring public policy, it's our bad infrastructure planning. It's our inner-city school education. It's excess regulation. It's expensive health care. We have the best health care in the world. We also have the most expensive and 50 million uninsured. It's excessive litigation, which is 1% more than the rest of the world. I can go on and on and on. It's mortgages. You want to make mortgages more accessible to minorities and lower mortgages, reduce the burden of regulation. It'll bring down the cost and make it more accessible.
Amen. Amen. And reclaiming my time on that. So here's as a former, long ago licensed realtor and someone whose family is still involved in housing and construction, please, for the love of everything that is holy, do not offer a 50-year mortgage. Okay, this will do nothing, absolutely nothing to build wealth or build equity. All you will be doing is having a long-term rental because you folks are going to be getting all of the interest. So that is, home ownership is the key, and I agree with my friend from New York on this, but it is not just extending payments. We have to get at the root cause of why housing is not affordable. All right, Mr. Diamond, very quickly, you said in your testimony our success and accomplishments are founded on our commitment to our shareholders. Obviously, that seems to have been shifting. I would say the Securities and Exchange Commission and others who have done an about-face on shareholder proposals with new staff guidance and those kinds of things seem to have a different take. I'm curious, how are you balancing as a shift in this? And you've got 15 seconds.
We will still focus on building the best company by serving shareholders, employees, and customers, and we'll have to navigate whatever the new SEC rules are.
All right. Mr. Rogers, we're going to touch on more on mergers. I would, by the way, posit that mergers are more because of Dodd-Frank than greed or nefarious motives. And in fact, I think Mr. Diamond, you on a shareholder call at one point said Dodd-Frank was good for your business with that and that consolidation that was going on. So, Mr. Rogers, would you agree that retail banking is a highly competitive business?
It is, yes, Representative. So
okay.
Very competitive.
And your bank, Truist, is the result of a merger in 2019, correct?
That's correct.
Okay. Do you believe that merger allowed you to increase or decrease the accessibility to banking for your customers?
I think the merger has afforded us a great opportunity to increase accessibility and for our customers, and that was never more apparent than during the pandemic, when we were able to do $17 billion worth of loans, be the fourth largest PPP lender, do 120,000 loans and 80,000 to small businesses. We wouldn't have been able to do that with our prior scale.
All right, well, I appreciate that. I've got remaining seconds here. I do believe that the policies that we've had as a federal government, including and leading with the spending that we have done, have led the Fed to this spot where they probably need to do a 100-point basis increase, if not certainly that 75 points. Otherwise, we're going to find ourselves in a worse inflationary situation, and we have to stop the spending and get our policy house in order. With that, I yield back.